Right now, Plug Power, ticker PLU, is trading at $3.80. It is up an unbelievable 97 cents on the day, a surge of 34.28%. A move of this magnitude in a single session is extraordinary, and it is not happening in a vacuum. This isn't just random volatility. This is the market reacting violently to a piece of news that fundamentally alters the entire investment thesis for the company. The narrative that has surrounded Plug Power for the last year, a story of persistent cash burn, shareholder dilution, and survival, was just completely upended. Most investors were looking at this stock's chart and seeing a slow, painful grind lower. The reality that hit the market today is a government-backed financial lifeline that instantly vaporizes the most significant near-term risk that was weighing the company down, forcing a massive and painful reevaluation for anyone betting against it. The prevailing expectation for Plug Power was one of caution bordering on outright pessimism. Investors, from those managing a self-investing portfolio to large institutional funds, were rightly concerned about the company's liquidity. The ambitious plan to build a coast-to-coast green hydrogen network is incredibly expensive, and the company's balance sheet was showing the strain. Every earnings report was scrutinized not just for revenue growth, but for the rate of cash burn. The common belief was that another highly dilutive capital raise was not a matter of if, but when. This fear acted like a gravitational pull on the stock price, keeping it pinned to multi-year lows. Many who held the stock through Fidelity investments or a similar individual brokerage account were beginning to lose faith, while short sellers saw an easy target, a company with grand ambitions but a dwindling bank account in a high interest rate world. Today, that entire reality was shattered by the finalization of the company's long-awaited loan guarantee from the Department of Energy. The confirmation that Plug Power will receive up to $1.66 billion in loan guarantees to develop and build up to 6 green hydrogen production facilities is the thesis-changing catalyst the bulls have been praying for. This isn't just a loan, it's a monumental vote of confidence from the U.S. government. More importantly, it provides a massive tranche of capital at what are expected to be favorable terms, completely removing the immediate need for a dilutive equity offering. The market is now forced to look at Plug not as a company struggling to stay afloat, but as a federally backed partner in building out the nation's clean energy infrastructure. The game has changed from defense to offense. This dramatic shift is painted all over today's trading session. The stock likely gapped up significantly in pre-market trading as the news broke, and the buying pressure has been relentless ever since. We are seeing astronomical trading volume, likely multiples of its daily average, as a ferocious short squeeze ignites. Let's be clear about what that means. A significant number of traders and funds had borrowed shares of Plug and sold them, betting the price would continue to fall. When this overwhelmingly positive news hit, they were caught in a trap. To close their positions, they are forced to buy back the shares. This frantic, price-insensitive buying from shorts, combined with new buying from investors who now see a de-risked company, creates a feedback loop that sends the stock price parabolic. This is precisely the kind of explosive action that retail traders on the Robinhood app dream of, but it's a nightmare for the sophisticated funds using platforms like Interactive Brokers who were on the wrong side of the trade. The sheer force of this move tells you that the market was positioned entirely the wrong way for this news. For those who need a refresher, Plug Power aims to be a one-stop shop for the green hydrogen economy. They manufacture the fuel cells used in machinery like forklifts for major customers like Amazon and Walmart, and they also build the electrolyzers that produce hydrogen from water and renewable electricity. The crucial and most expensive part of their strategy is building the hydrogen production plants themselves to create a vertically integrated supply chain. This DOE DOE loan is aimed squarely at that capital-intensive piece of the puzzle. It directly funds the construction of the very facilities that are essential to the company's long-term vision of producing, liquefying, and delivering green hydrogen at scale. Without this funding, the vision was just a well-meaning ambition. With it, it becomes a tangible, funded business plan. This is why today's reaction isn't just irrational exuberance. It's a logical and powerful repricing of the stock based on a dramatically improved risk profile. The conversation among those using investment sites and SoFi Invest has now shifted overnight from "will they have the capital" to "how efficiently can they deploy it?" Looking forward, the landscape for Plug Power is now drastically different than it was 24 hours ago. The bull case has been supercharged. With the balance sheet secured for the foreseeable future, the focus shifts entirely to operational execution. The market will now be watching for construction milestones, project timelines, and updates on the production costs from these new facilities. If Plug can execute flawlessly, build these plants on schedule, and begin producing green hydrogen at a cost that is competitive with legacy fuels, especially after factoring in production tax credits, then today's price could be just the beginning of a sustained recovery. This single event provides the company with the breathing room it needs to bridge the gap to profitability. For comparison, this is a different kind of catalyst than what might move Apple stock or Nvidia stock, which are driven by product cycles and earnings beats. This is a foundational event that secures the company's very existence and its ability to pursue its core mission. However, even with this massive win, risks remain, and the bear case has simply evolved, not disappeared. The bears will now pivot from questioning Plug's solvency to questioning its ability to execute. They will point to the company's history of project delays and cost overruns as a reason for skepticism. Building complex energy infrastructure is notoriously difficult, and there is no guarantee that Plug will hit all its targets. The $1.66 billion is a lifeline, but it needs to be managed perfectly. Furthermore, the ultimate profitability of these plants still depend on factors like the price of renewable electricity and the demand for green hydrogen from end markets. The competitive landscape hasn't changed. Other major players are still working to build out their own hydrogen infrastructure. Now that the DOE loan is a reality, does this make Plug Power a long-term hold for you? Comment your thoughts below. The discussion around this stock in online investing communities and on Fidelity trading platforms will be intense, as investors recalculate their models to account for this new reality. This is no longer a simple bet on a struggling company. It's a more nuanced bet on a funded company's ability to execute a complex industrial project. In conclusion, today's colossal 34% surge in Plug Power stock is a direct and forceful reaction to the removal of its single greatest existential threat. The expectation was for a continued struggle for capital fraught with the risk of dilution. The reality is a massive non-dilutive infusion of government-backed funding that validates the company's technology and funds its strategic roadmap. The short squeeze has amplified the move, but the underlying cause is a fundamental de-risking of the business. The narrative is no longer about survival. It is now about delivery. While significant operational hurdles still lie ahead, the company has been given a clear runway to prove that it can turn its ambitious green hydrogen vision into a profitable, world-changing enterprise. The market has been shocked out of its pessimism, and a new chapter for Plug Power has just begun. Don't forget to like, comment, and share. Disclaimer: this content is created only for educational purposes.